In today's world of market volatility and uncertainty, your retirement plans need to be front and center. With ever-changing tax laws, healthcare worries, and an unpredictable stock market, don't overlook the vulnerability in your retirement planning. Protecting your family and estate will be difficult with shifting policies in Washington. It's more important than ever to keep an eye on retirement.
Hi, and welcome into Eye on Retirement, the weekly show that keeps you in the know about all things retirement. I'm your host and financial advisor, Rick Everett, along with the full complement of panelists for this episode, to include founding partner and financial advisor Matt Goolsby with Market Advisory Group, our lead CPA with Market Tax Services, Joshua Cicora, health insurance advisor from Market Medicare Advisors Trey Basa, and our lead attorney with our estate planning team, Eidelman Law Firm, Gerald Eidelman. For our regular viewers, we welcome you back. And for some of you that might be tuning in for the first time, we're a show dedicated to helping folks just like you avoid disaster and costly mistakes in retirement. A full team working together to help people with not just investment, but tax, Medicare, income, and estate planning. Matt, you have this story this week about Don and Sue. Tell us about them, if you would.
Well, I met Don and Sue. They came to one of our taxes and retirement classes that we put on around the metro. And if anyone else there wants to go to one of those classes, they can check them out at marketadvisorgroup.com and go to the classes tab at the top there. But when Don and Sue came to this class, they realized their financial advisor that they were working with at the bank probably just wasn't able to help them with everything, because they had tax questions, they had estate planning questions, and of course, as her and her husband were going to be retiring soon, they also had questions about their Medicare. But taking it back to when they were working with a firm before us, they were working with someone at their bank, and the bank didn't really help them or maybe give them the full service they needed. While we got to know them, we found out that Sue actually prepared their own taxes every year, and she'd been doing that for 10, 11 years, something like that. And to her own admission, she says, I probably don't know everything I need to be knowing here. And that happens all the time. But what they should have been doing over the past 10 years is deducting the continued contributions they were making to his IRA. They had rolled it to the bank and they wanted to keep contributing there. And no one from the bank told her, well, you need to be deducting this from your IRA or your income every year because you can deduct IRA contributions. As a financial advisor, I'm not a CPA. So when things like this come up, I go down the hall and I grab Joshua Cicora with Market Tax Services.
Joshua, contributing to an IRA different than contributing to a Roth. There's ways of doing things to get the maximum bang for your buck, for lack of better words.
Yeah, and speaking to their experience, it's different than contributing to your 401k. because that's all just goes out through your payroll. It changes your W-2. You don't really do anything. But in her situation, they were making the contributions themselves to that IRA at the bank. And so they knew that something was supposed to happen in there that made the contributions pre-tax, or they would get a tax benefit for having made those, but they really weren't sure how that was going to work. And as you talked about, they had done this for a number of years. When you brought me into the room, Matt, we really had a couple different ways we could go with it. One option would be to go amend those returns, go get that deduction they had passed up on, but the downside there was you could only go back 3 years to get that refund. And after that, the IRS just says, well, that's great, but thanks for your patriotic contribution. We're keeping those tax dollars. So in their situation, they really benefited by going with an option that's really not as obvious, and that's let those contributions stay not deducted. And then when they go take distributions from that account in the future, they can get some of those distributions back free of tax. But in order to do that, they had to tell the IRS, hey, we made these contributions, we don't want the tax benefit for them, and so we'll just deal with the tax benefits down the road when we take those distributions. But we kind of have to sit down, we have to talk about how to do that. It's not just filing your regular tax return, and so we're able to talk about this different filing strategy around a Form 8606.
So had they not had a team working for them and being there in that moment to help them say, hey, had Don started taking money out of his IRA in the future, he would have been paying 100% of that withdrawal, 100% would have been taxable. And so now you're saying that's not going to be the case when you get done fixing all this.
That's right. So we file this set of forms, and now when they take distributions in the future, some of it will be taxed because it's his rollover of the 401k. Some of it will not be taxed because they did not take a benefit for the contributions. And then whatever growth has happened on the account will get split between those two camps as well.
So that covers the tax situation, but were there other concerns that needed addressed?
Well, I'd mentioned that he was a couple of years off from filing for Medicare, but he was on a couple of specific medications that he wanted to make sure were covered in a certain way. And so since I am licensed to offer Medicare, but I want to make sure that I'm bringing in someone that's focusing on that all the time. And we brought in Trey to answer that.
Trey Basa with Market Medicare Advisors, how were you able to help meet the needs of these folks?
One big concern people have when approaching retirement is, how am I going to be able to afford this, that, and the other? And prescriptions is a necessary cost for a lot of retirees. So Matt brought me into the room and we talked about a couple of his scripts, and he did mention a costly one, which was maybe a couple hundred retail, but with a prescription drug plan when he actually makes the move to Medicare. That private insurance company does offer a good coverage rate for that higher tier. You do have he did have a pretty high deductible to spend though, a couple $100s before he got better coverage. Just to give him some projections, still a few years off, but we are seeing prescription drug plans improving in quality year after year.
So we've covered taxes. We've covered health insurance. What other pieces of the puzzle needed to come together in order to make a complete retirement plan?
Well, you'd think maybe it was some whiz-bang investment, right? I had the best no, that's not what it was. No, we said, I wouldn't be a true fiduciary if I didn't say, do you have an estate plan? And I'll let Gerald take you through we brought him into the meeting because they had an existing plan, but there were some things with it.
Gerald Eidelman, Eidelman Law Firm.
Yeah, when I came to see them, one of the interesting things is that they had set up their estate plan through their church. This is not uncommon. Many churches offer estate planning services and just simply ask for a donation to be put in the will. One of the things that in this situation wasn't covered, and this happens sometimes, is that they don't do a full estate plan. They simply do a will. And people sometimes think, I have a will, I'm protected, everything is good. But that is not true. First of all, the will only transfer assets. And that only happens after you die. On the other hand, you have documents that you need while you're alive so that somebody can take care of your affairs and yourself should you need to. And so in this case, we talked to them about powers of attorney for finances, powers of attorney for health. They were very relevant because they were getting in on years. They had several kids that could serve that role. And we prepared those documents in order to protect them during life. And the other thing that we did is we switched from the will that they were working with, and we converted it basically, or did a trust for them, because they have several pieces of property, land, and other things in different states that would have made it really difficult to probate in every single state. So in doing that, we simplified their plan. They had also were no longer part of that church group that they got the plan from, and they wanted to remove that and leave some of that money to their grandchildren, that they had some now.
Trying to steer a retirement plan alone can feel a lot like steering a ship in the ocean. It helps a lot when you have a team taking some of the stress off your shoulders to get to your destination safe and sound. At Market Advisory Group, we are the team that can take some of the stress off your retirement. And if you'd like to set up a complimentary, no-obligation consultation, operators are standing by right now to take your call at 316-252-8707. Again, the number to call, 316-252-8707. And be sure and check out our website. As Matt said earlier in the segment, there you can find informational classes that we put on throughout the community and submit a question, perhaps for use in a future show. We'll be back with more Eye on Retirement right after this.
Out on the water, there is a moment. Perfect synchronization. The team working together in harmony to reach their goal. Now, imagine finding a team of financial professionals to help run your course down the river of retirement. Market Advisory Group is that team. Financial advisors, tax professionals, estate planning attorneys, and Medicare advisors. All in the same boat. If you don't have a team like this in one place, it can become a hassle to relay information between them. When you come to Market Advisory Group, we bring everyone together for you. To get you answers in real time. To help make sure you don't miss something that puts your unique plan off course. You shouldn't be the one doing all the work to keep your retirement on pace. You should have a team in the boat with you. Your voice telling them where you're at, where you'd like to end up, and how you want to get there. And at that point, everyone falls into sync, all pulling in the same direction, toward the same purpose. Your retirement's financial security. We are Market Advisory Group, proud sponsor of Shocker Rowing.
Hi, and welcome back into Eye on Retirement. Matt, for this next segment, you recently met with a couple that had some, for lack of better terms, inheritance woes. If you would, share with us.
Yeah, and again, this gets back to why it's so beneficial to work together as a team here. So this is a couple we met with. We'll call them Dan and Terry. And his mother had passed away this past year in 2023, and his wife had been doing the taxes for year in, year out, but they just didn't understand how this inheritance was going to impact their taxes. They had a lot of questions as far as what they would owe because the mom's financial advisor, and we see this all the time, they just had them withhold 10% in federal and 5% in state. Well, Dan's still working and he's making about $100,000 a year at his job, and his wife is on Social Security disability, so they're already in the 22% tax bracket. I mean, pretty firmly planted there. And the advisor that mom had wasn't going to withhold enough taxes on them. And they watched this show. They knew that there probably wasn't enough in taxes withheld. And so we went down the hall, and this is just one more example of how financial advisors cannot help people with taxes, okay? And if you're not getting help with your taxes or not getting tax advice with your investment advice, what's it costing you? And you know, these inheritance, they make for big surprises come April whenever people file their taxes.
Joshua Cicora with Market Tax Services. What do you think about just check the box, 10 and 5, federal and state all the way across? We'll be golden and figure it out when we go to file.
Yeah, so I mean, obviously people can sense the energy here. That's probably not the right answer, but sometimes it can be the right answer, and that's where not only do we need to give tax advice, but we have to understand who our client is. For some people, they do like to owe when it comes to tax time, so it's important that when I give tax advice, I take into account who the client is, who we're talking to, and what their own preferences were. Now, in Dan and Terry's situation, yeah, it was not the right answer. As you kind of alluded to, Matt, they are in a much higher tax bracket. They're paying 22% federal taxes once you just get through their wage and Social Security income. So this piece coming in here with that inheritance creates a new complication. It's going to kind of fall in after all their other income. So yeah, the right answer should be something more in line with 22% withholdings, depending on how much they were taking out. Inheritance, you know, it always depends on where the money's coming from too. In this situation, we're talking retirement accounts, so that's definitely a piece that plays in. But depending on where those dollars come from, we can get to some significantly different tax answers.
Joshua, thank you. Trey Basa, Market Medicare Advisors. Dan and Terry, what was their Medicare situation?
As Matt pointed out, Terry was on Social Security disability. Being a few years out from 65, she can be on Medicare 2 years on Social Security disability. Talking about that, she didn't realize that she had another opportunity to re-enroll into Medicare at 65. You have an initial enrollment period. She has that second opportunity around 65 to change things up. And probably about 50% of the time we meet with clients, people that come to our classes don't realize that they have that opportunity to switch things up at 65 or even at all. A lot of times we do sit down and we talk to people about both options, all of the routes that they have, and it can be eye-opening. When you sit down and talk with a client and they're hearing all this stuff that they didn't know about options, routes, opportunities to switch things up, it can be quite eye-opening.
Matt, the story started with Dan and Terry receiving an inheritance, but did they have an estate plan of their own?
They told me and said, well, we've been meaning to get around to it, and we just haven't really got it. And I said, hang on, let me go down the hall and grab Gerald. And we brought in Gerald Eidelman of Eidelman Law Firm.
Gerald, your role with Dan and Terry.
Sure. In this case, we were starting with a blank slate that had nothing in place. But it was very important that they did something because Dan and Terry were a blended family. Dan had children from a prior marriage. Terry had no children. And this money had come from Dan's mom, and there was sort of a obligation Dan felt that that money should go to his children once he passed away. He was concerned about taking care of Terry while she was alive and be able to provide some of that money for her care, but he didn't want to exhaust those funds because he wanted to make sure that their children got something from the grandparents, essentially. And in order to do that, we set up a trust so that the money was kept in trust, the inheritance money was kept in trust, and distributed out during Terry's lifetime. And then once Terry passed away, the balance would pass directly to the children of Dan.
Very good. We've done 2 segments of the show and illustrated 2 cases where on a first meeting, the entire retirement planning team got together for the benefit of our clients. Do you have a whole team working for you? And if not, what piece of that retirement puzzle might you be missing? If you'd like to set up a complimentary, no-obligation consultation with our team, operators are standing by right now to take your call at 316-252-8707. Again, the number to call, 316-252-8707. In our final segment of the show coming up, we'll dive a little bit deeper into taxes, and that comes your way right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. We'll start with a full-blown analysis of what you already have by running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no-obligation, full-blown financial review today.
I need a place to go to see about my investments. Ask my friends if they know about holistic retirement. Everything in one place. Estates, taxes, and Medicare. People meeting face to face. Advisors to help me get there.
At Market Advisory Group. Retirement under one roof. At Market Advisory Group. We're invested in you.
Hi, and welcome back into the final segment of Eye on Retirement, and it's everyone's least favorite time of year, tax time. Matt, last year we introduced a new tool to help people with tax planning, and it's exciting for you to be able to tell them about it again at this time of year.
I thought you just meant it's everyone's favorite time of year, and that was sarcasm because it's so darn cold lately. But yes, retirementtax.com. We partnered with Joshua Cicora over on the CPA side, and we built retirementtax.com. It's not an end-all to end-all. I mean, we want it to be just a teaser tool to show you guys what tax liabilities could be lurking in your retirement accounts out there. And Joshua, the Tax Cuts and Jobs Act, that expires here in about 2 years, doesn't it?
Yeah, so the law has a sunset provision to the individual provisions. So here in a couple of years, the tax code's going to be different. Who's not excited about that?
So the standard deduction will probably come down.
Yeah.
Will be less. Maybe people can itemize again. Maybe they can't if they've paid off their mortgage. Maybe they don't have things to itemize.
Sure.
But where I'm concerned at from a financial advisor standpoint is the percentages of the tax brackets are going to go up.
Right, the actual rates are going to go up.
And so when people are forced to take money out of their retirement accounts, whether to supplement their Social Security income, whether to take the required minimum distribution when you turn that age, the amount they have to take out, we'll all be paying more in taxes.
That's right. And that actually kind of dials back to our first story where they had the deductions that hadn't been, or the contributions that hadn't been deducted. If we had gotten that refund for them, it would have been at today's low tax rates that they would have had to repay in the future at those higher tax rates. That's not good.
And no one had really walked them through that, and they hadn't really thought about taxes. In fact, that's why they came to the tax class. But when we're looking at this retirement tax calculator, or excuse me, retirementtax.com, it's a calculator that helps people kind of estimate how much that retirement account, that IRA or 401k, will cost them and their beneficiaries in taxes over their lifetime.
Predicting future owings.
It's almost like your IRA or 401k is like an adjustable rate mortgage. I mean, you wouldn't go take a loan out unless you knew the interest rate, what the payments were going to be, the terms of the loan. People that have saved in IRAs and 401ks, they've taken a tax deduction normally when they put that money in there, and their employer maybe gave them a match. You got to get that free money, the match. Well, that match is typically pre-tax until this year, I think is
This will be the first year that it becomes an option.
But most people are not still going that route.
That's right.
We're not seeing that. So when you have all these accounts that have built up over time, it's great, but you may only have 60 cents on the dollar if you take it out all at once and hit all those taxes.
Joshua, a question for you. Do you find it extremely beneficial to be able to work with the financial advisor as you're helping someone navigate the tax maze?
Yeah, I sure do. Normally, before we teamed up, I would meet with clients and I would say, okay, well, you need to go do this, that, and the other thing. Maybe it's talking about Roth conversions. Maybe it's talking about adjusting withholdings. And I basically have to say, okay, you go do this. Good luck. Let me know how it turns out.
See you next April.
That's right. See you next April. And then I'm off doing whatever. When I'm working with you guys, with the financial advisors, when we have things that need to happen, we can talk about it, make sure it happens together, whether it's adjusting withholdings, whether it's saying, go do this Roth conversion. I get better information on what assets are in play to do things like that. We can talk about more sophisticated strategies because it's not just working with the information from the client. We can go and dive a little bit deeper and then bounce things off of each other, looking at that whole picture, not just the tax consequences, not just the investment performance, but marrying those together to make sure that whatever plans we come up with are what's best for the client and often better than what we come up with individually.
And then would you believe it or not, Rick, occasionally, ever so often, those 535 idiots in Washington, they'll change the tax code. Can you believe that?
Every once in a while.
Every once in a while. And then I have to go back to Joshua and say, well, wait a minute. So this was the plan, but then the laws are going to change in this. And we have to make tweaks and adjustments there.
That's right. Whenever we come up with these plans, they are never set in stone. It's always set in pencil. And we'll go back and rework them and adjust for both changing tax law, changing life situations. Nothing is really static, and so when we come up with these plans, they can't be static either.
But just like we gave a story about the taxes for this week, I could go down this road and do the same with Medicare and the same with estate planning.
Oh,
It
exactly.
all works together.
Exactly. And Joshua, Gerald, I'll tie you both in on this question. There's got to be times when there are more tax-wise ways of estate planning than not.
Yeah, absolutely. Yeah.
Yeah.
And that's all there is to say on that.
Taxes as they pertain to Medicare, another tie-in.
Yeah, I mean, we'll see that when we talk about like doing different planning strategies like Roth conversions. If I'm not working with Trey and we dump too much into a Roth conversion, then he'll throw a red flag and say, hey, be careful, you know, there's Irma coming down the path. Medicare premiums are going to go up, and people may like that, they may not like that.
Probably won't like that.
It just depends on everybody's situation on if that cost is worth the benefit.
I guess the bottom line would be is if you don't have an entire team working for you,
Could be costing you thousands of dollars.
there's a lot at stake here.
There's a lot of things where this overlaps, and if you're not working together with this team, you're probably missing something.
Taxes are something that a lot of us have become accustomed to doing ourselves, but when it comes to doing taxes in retirement, things get real complicated real fast. But not just taxes, it's Medicare, investment planning, and estate planning. We've got a whole team ready to go to work for you, and all you have to do is make the call at 316-252-8707. That's all the time we have for this week. I'm Rick Everett, along with the whole team, reminding you that we're here to keep an eye on retirement.
Unless otherwise indicated, all client and prospect names mentioned on this show have been changed to protect the identities of the individuals discussed. Investment advisory services are offered through Foundations Investment Advisors LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns are not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. Legal services are offered by Eidelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal or tax advice. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not in any way refer to investment advisory products. Rates and guarantees provided by insurance products and annuities are subject to the financial strength of the issuing insurance company, not guaranteed by any bank or the FDIC. The guest commentators featured in this show are not investment advisor representatives of Foundations and do not provide advisory services. Market Advisory Group does have several investment advisor representatives that can provide such services. This is not endorsed or affiliated with any U.S. government agency, the Social Security Administration, or associated with any federal Medicare program. We do not offer every plan available in your area. Any information we provide is limited to those plans we do offer in your area. Please contact Medicare.gov or 1-800-MEDICARE to get information on all of your options. A Roth conversion may not be suitable for your situation. The primary goal in converting retirement assets into a Roth IRA is to reduce the future tax liability on the distributions you take in retirement or on the distributions of your beneficiaries. The information provided is to help you determine whether or not a Roth IRA conversion may be appropriate for your particular circumstances. Please review your retirement savings, tax, and legacy planning strategies with your legal/tax advisor to be sure a Roth IRA conversion fits into your planning strategies. All rights reserved.